Okay, before talking about make or buy, let's talk about the contribution concept. Sales less marginal cost means variable cost, you get contribution. And then after that, if you take away fixed cost, you get profit. Remember, if a product like product A, product B, as long as it is giving you sales less VC, let's assume sales is £10, VC is £6, so contribution is 4. Maybe this is £10 and variable cost is 11, so there's a negative contribution. So and let's assume FC, fixed costs are £5 here and maybe £2 there. So obviously B is heavily loss making, which is -3, and if you minus this one, A is -1. You might be, don't produce any of it. No, you should still keep producing A. Why? It is giving you a positive contribution. Why? Because you'll have to occur the fixed cost anyway. Yes, you can think of considering not to produce B because it's giving you negative contribution. If you don't produce it, how much you are losing? 2, don't you? Are you losing 3? No, you're losing 2 only. But if you don't produce A, how much are you going to lose? You lose the whole contribution, 4. So the simple words are, as long as the product giving you contribution, you keep producing it. Make or buy, the question comes when you have the option to buy from outside. Yeah. Again, A, product A, you can make £5 or you can buy £4. You're gonna go with the £4. That's financially cheaper. But you must take into account the other consideration like quality of the goods, timing, are you going to get the goods on time or not, any bad impression over there, like from where you're buying, are they using child labor or not. So these are the items. Opportunity cost. What do you mean by that? Opportunity cost is the opportunity lost for a chosen action. Like if you choose not to produce, rather buy, you might lose some of your existing opportunities of not selling your items. If I give you another outside example, for example, you're doing your A levels or GCSEs, AT, so you're studying, yeah, A level, and you're paying tuition. Let's assume £15,000 or £14,000. Okay, so you're paying it. You had the opportunity to work rather studying A level. You could have worked and earn another £10,000. So you are foregoing this. Foregone. You see, you're not taking this opportunity. So that's your cost as well. So the total cost of your A level first year is £24,000. Okay, there is an example of make or buy decision. Let's get over on it. Straight on to the point. The cost of making each control box in-house at the current level, 5,000 units you're producing. Each item, material, labor, variable. So these are all variable cost, and there's a fixed cost, altogether £15. And so £15 is the cost, total cost. How much is the variable? 2, 5, 7, 8, 950, isn't it? 950 is VC, and 550 is fixed cost. Remember, fixed cost is irrelevant when taking decision making. Fixed cost irrelevant because it will have to. You'll have to pay it anyway. It will occur anyway, whether you produce the goods inside or not. You'll have to pay. Now, you got an opportunity. The supply has quoted £10. By looking at £10 and 15, you would say, 10, let's go for 10 and let's take £10. We buy £10 and, yeah, sell it at a high because we're saving £5. Not actually. They're asking you, are you going to make or buy? No. Your marginal cost is 950, so that is cheaper. Here we go. They're telling it here. So you multiply 950 with 5,000. That is your actual cost basically. If you buy, 50,000 is the cost. The £5 fixed cost is going to occur anyway. Yep. So if you make inside, you can save these £2,500.